Good day everybody. Today we're going to be discussing a bank reconciliation. Firstly, what is a bank reconciliation? A bank reconciliation should be performed by the accounting clerk monthly. This is done by firstly comparing the entity's own bank balance in their books with that of the monthly bank statement which is sent out by the bank. Then, any differences that are identified between these two amounts are further followed up by this accounting clerk to ensure that any errors are corrected and detected and that information is captured into the entity's books. As mentioned earlier, the purpose of a bank reconciliation is to identify any differences between the entity's own records as well as that of the entity's own bank. This is done in order to ensure that the entity's records kept are 100% correct and up to date, as well as to ensure that the entity's bank has not made any errors on their side. I'll now discuss the procedures in order to perform a bank reconciliation. Firstly, you need to obtain the monthly bank statement from your bank. This can be requested or sent monthly by the bank itself. Then you'll need to close off all your monthly cash payment journals as well as your cash receipts journals to your bank general ledger account, and then balance this off. You will then need to compare these two balances, making use of the table that I'll show to you later. And then once this is done, there will generally be differences. And then you need to investigate these differences in order to make sure that we perform the necessary corrections or find out why these amounts aren't the same, for example, in our accounts versus that of the bank accounts. This is the table that I was referring to earlier. So here we are going to perform a bank reconciliation for March 2017. Here we will first, as we said earlier, obtain the balance per the bank statements. Then we will want to agree this balance per the bank statement to our own bank account that we would have recorded in the general ledger. Then if there are differences, we need to follow up what these differences will be. This could be, for example, the fact that outstanding check payments have not yet been processed by the bank that we have recorded in our own books, or due to the fact that we may have already recorded receipts, but this has not yet been reflected into the balance per the bank statement. Also, there could be various errors either on our side or on the bank side, but only the bank's errors will record in this reconciliation because we would have already fixed this in our own bank account. Now we will address what causes the balances not to match between the balance per our bank account versus that recorded in our general ledger. The problems are caused by either us or by the bank side. In our case, for example, we would have deposits that have not yet been recorded, or we could have debit orders that have gone through without us recording them in our books. We could also have interest charged or given by the bank or bank charges, whereas we would not know these amounts as these amounts would be determined by the bank, and we'll only find this out once we perform the bank reconciliation. The problems on the bank side could be, for example, deposits that have not yet been reflected that we have recorded in our books, as well as cash payments such as checks not yet cashed, as well as, for example, errors that may have been made by the bank, or where they've recorded amounts that differ from ours. As I mentioned earlier, one of the main causes for the balances not to match is errors. This could be either been made by us in our own bank account or, for example, been made by the bank. This could, for example, include errors in the fact that we didn't record something, or the fact that the bank recorded something other than what we have recorded in our own books. Then another issue is often caused by timing differences. This is, for example, with regards to checks, where, for example, we pay somebody, we will record it in our books, whereas the bank itself will only record it once the person presents the check to the bank. I will now discuss a short example with you of XYZ Limited. Here's the bank statement from Standard Bank for XYZ Limited on the 26th of March 2017. Here we have recorded all the different amounts coming into and going out of their bank account. You need to remember that a positive balance will be a credit balance, and whereas a debit balance reflects amounts leaving the entity's bank, thus minusing from their overall balance. Here again we can already see that an issue will arise because this bank statement reflects only balances on the 26th of March, whereas in our books we have recorded transactions all the way up to the 31st of March. Again, as I said, the entity will now compare its bank accounts in its general ledger to that recorded in the bank statement. Our balance per the bank account in the general ledger is sitting at 59,000 at the end of the month. This, as we can see, this 59,000 does not match the balance per the bank statement of 37,000 Rand. As we saw, the two balances did not match, So now we need to find out what are all the matching items as well as the amounts that we need to either correct or fit into our bank statements. Here I've also recorded the bank reconciliation for February in order to ensure that any of these amounts that are reflected in the bank statement do not correspond to amounts that we've already recorded and identified as missing on the previous bank reconciliation. As you can see, this 40,000 Rand outstanding deposit in the bank recon is now reflected into our bank statement, so we can match that off. Then our outstanding check number 51 can now also be matched off against the bank statement, which is amount of 30,000 Rand. Then our deposit of 20,000 Rand, which we can see is from the cash receipts journal for March, consists of the 15,000 as well as the 5,000 Rand deposits. Then we have a 79,000 Rand amount, which corresponds again to the amounts in the cash receipts journal, which is then totaled and then deposited. We also have amounts from our cash payments journal of 5,000 Rand for equipment, which matches off in our bank statements, as well as the 20,000 Rand EFT for salaries. The following amounts I've highlighted as missing amounts that haven't been matched off against our bank statements. This includes, for example, the check number 52, which is still outstanding, as well as another deposit from the 30th of March from the cash receipts journal, as well as various payments, as well as possible amounts that we still need to record in our cash payments journal or cash receipts journal that has been recorded on the bank statement but not in our accounts. As I mentioned earlier, some of the amounts in the bank statements were not recorded in our own journals. These include, for example, interest and sundry expenses, as well as interest income. The sundry expenses will be, for example, the bank charges that would have been recorded in the bank statements that we were unaware of but does relate to this month. So we will then fill in these correct amounts before performing our final general ledger balance. We will now perform the actual bank reconciliation. Firstly, we will need the balance per the bank statement, which is sitting at 37,000 Rand as per the 26th of March. Then we need our balance per the bank accounts in our general ledger. This amount now consists of 60,000 after we have done those adjustments to the amounts that we found in our bank statement, such as the bank charges and interest income and expenses, as can be seen by highlighting in the yellow. Then we need to correct our EFT amount mistake. In our bank statement they had recorded at 60,000, whereas in our cash payments journal we had recorded at 50,000 Rand. In this case, we will assume that the entity itself is correct and thus the bank recorded an incorrect amount in their books. So we will correct this by crediting it by 10,000 Rand in our bank reconciliation. Then check number 52 is still outstanding at the end of the year, so it will be recorded under the outstanding checks on the debit side. Again, also the 30,000 we've already shown has been cleared from our previous bank reconciliation, so the balance there will be 0. Then we have next our 50,000 Rand check for amounts outstanding, which will be the 50,000 Rand. Then again, there's another check outstanding, which is check number 54 for 20,000 Rand. And then again, as I explained earlier, the EFT difference for the consumables of 50,000 Rand versus 60,000 Rand will be standing there as a credit for 10,000 Rand in our bank reconciliation statement. Then we'll record the amounts of receipts outstanding for amounts of 60,000 Rand as well as the amount of 20,000 Rand. Then, as you can see, an error was made by the bank by processing a check number 1094, which is clearly not part of our checks as we are only sitting in the region of the 60s. So this 8,000 we will then correct in the bank reconciliation and notify the bank of this mistake. After this is done, we can see now that our two amounts will now be balanced through these reconciling amounts, and that is a bank reconciliation.